Good day, traders. Beautiful sunny day in southern Canada. Just had a great workout. Today we're talking about the bigger picture setups. So one of the things that I often will post is entries on a 1 minute chart, but the setups are always based on the bigger time frames. And so great question from a trader. I still don't know what you mean by other time frame traders. So we talk about front side, back side. We could be in a weekly template where we're still on the front side of a move with a high probability reversal trade or a trend trade. And that trend trade may be on the front side of a move and it's driven by other time frame traders, maybe 4 hour, daily, hourly. And when we're on the back side of a move, we still may be that trade may be driven by other time frame traders. And what I mean by that is we've talked about front side, back side. When we're on the back side of a move, we may now have hourly traders that are on the backside of the move as well. They've broken structure, they've started a reversal, so now we've got a high probability opportunity that we can maybe size into, but it may be limited in terms of how far it may go on the day. So once we have the 4 hour on the backside, we've got a higher probability opportunity, and maybe daily as well, because now we're in a potentially a monthly move. And then we've talked about that with the beginnings and endings of months, the timing of those, week 3, all those sorts of things, because that's when we start to incorporate other time frames into high probability reversals or moves coinciding with the new month. So sometimes when you're trying to get in on the 1 minute, you're forgetting whether or not that trade is being driven by other time frame traders. So getting in on the 1 minute sometimes is for a session scalp, high probability session scalp. We saw that on the yen crosses today, euro and pound. But they're still on the front sides of the moves on longer time frames. So great opportunity for the session, high probability capitulation moves for 50 pips very quickly, a little bit more on the pound yen. Same thing with the short squeeze on the Canadian dollar, a day 3, low of week, explosive move. The Canadian dollar loves short squeezes. You'll see that a lot on that pair. But point being is that if you're too jittery or you're getting shaken out of moves, and again, it takes practice and understanding the type of trade that you're in, is to size down. Just size down and focus on executing the trade, managing your risk, and being patient, because getting in on the 1 minute, it's not about trying to, have a laser-like execution. It's about timing the entry into a bigger time frame move. And so that's where understanding the bigger template comes into play. So hopefully that helps, because when you get a larger move on the backside, or even in a trend trade on the front side of a move, and other time frames are driving it, they are high probability. They may be low-hanging fruit. We saw that on New Zealand and Aussie dollar today, just following through. New Zealand dollar was first red day, and interestingly enough, the Aussie dollar moved much cleaner, and that's an example of don't follow the hot chick. New Zealand's been trending down all day long. It gave a low-hanging fruit trade. It was very slow to roll over, whereas the Aussie dollar, same time that it took, but it had a nice vertical blow-off move, very clean, an example of, again, 3rd hour entry, just like pound yen, euro yen, for a capitulation, for a move that's over very quickly. So really important, again, to understand the timing. Great question, but when I say that our other time frame traders driving the move, that means we've got everybody on board potentially, and that's why it's so important to me when a market goes outside of the previous day's range. Now I know we've got everybody on board if there's a setup that presents. So hopefully that makes sense. We've had some big moves today. Again, gold is first red day yesterday, and huge move in the US session. Again, an example of great opportunity in Europe, London. Perfect setup. The consolidation was there. It gave a vertical parabolic move out of that first red day consolidation, and the US consolidated into a nice rectangle that moved right at the New York Open, pulled back to 50% of that range, and then dropped like a rock. So a lot of opportunities, fantastic opportunities. Focus on the process, step back, look at the bigger picture, and again, with those setups, it's always about the ones that are gonna give a vertical move. That's what I'm looking for. Sometimes they're not gonna play out that way, but they move in the right direction, and oftentimes it's just, you've got to get 1% better every single day at identifying the best pairs, and then just having the confidence to execute. Size down if you're just building that up. to next to nothing, but just focus on executing as flawlessly as possible and managing the trade. Have a great day, traders. 1% better every single day, and may the markets go with you.